Hi, welcome to Market Alert for Thursday, the 25th of June 2020. So, COVID comeback batters big tech and black gold, and sparks bond bid. It's back. Well, there's a lot of rumours about this at the moment, and of course, to add to the stock market's woes, we also saw a 3 billion imbalance yesterday, a sell imbalance, which goes back to what we saw the day before of this estimated selling in the billions to hit the stock market, which obviously turned up during yesterday. So let's have a look at and see what happened yesterday. We'll start off with the Dow. We didn't look at this yesterday. We'll start off with the daily chart, and you can see that we've got some pressure in this market. The 200 bar moving average is really putting pressure on this. Prices have closed below the 20 bar as well. The MDI is red. Does it mean it's going down? Well, they'll do the damnedest to try and bring this back. That's for sure. But at the moment, it's looking fairly weakish for the stock markets, given the backdrop of what's happening. So let's just draw in some fibs from this low to this high and get an idea of where the market could find support here. So there we go. So at the moment, we're currently at the 62% retracement there. Break below the 89, we'll see the markets come down and retest this level. But certainly weakness around, and I wouldn't be so surprised if we see further weakness, and then it'll give them the chance to start printing trillions again and adding it to the balance sheet. Like I say, expect 10 trillion by the end of the year. And intraday, you can see that the Dow was selling off from the start. There was a fair bit of a battle to begin with. You can see the buying and selling there, but eventually the market broke and down she came, which was 100, 200, 300, 400, 500, 600 points down, finishing the day 700 points down in the cash market. And then again, the classic bring the market back before the close, but failed miserably. Probably about a 38% retracement there. But it may be an agenda at the moment to move the market lower so that they can get more money for other projects. And the bogeyman in the room, COVID, is the brilliant excuse. Absolutely fantastic excuse. As I said in the video the other day, if you've not seen it, the one with Jim Sinclair, couldn't be more convenient as the financial system collapses. And that's exactly what is going on at the moment. Any excuse to print more money to keep it alive and kick the can down the road that we've seen for the last 12 years. So in the German DAX for yesterday daily chart, we're starting to see red now in the MDI. The sideways move failed to break out to the upside, moving to the downside. And I'll just remove this one for a moment. Let's just draw in a larger swing there in the fibs, and again watch the 12,000 level being broken, and then down to 11,978, the first target. So any sell signal this morning, then we'll see what the market does with the fibs in the daily chart. Meanwhile, yesterday we saw the market open. It bounced. We can see the buying inside of the green bar there. Prices coming back up, creating a double top, and then breaking through the 200 MA and the 20 bar and the 5, and then moving lower. There was no signal, simply because the criteria is just outside of the restrictions that we have in the settings. Now, if you want more trades, and it comes with a trade-off, this is that if you want more trades, you can take the restrictions out and click on apply, and you'll see the trades showing up there. Now, there are 3 winning trades there, but personally, I prefer to have them restricted, and at the moment, I log everything manually. I'll show you with regards to the best times to trade, the number of points, and so on and so forth, so that I can calculate the optimum settings for the volatility. And this at the moment is currently, as we move across, and the reason I do these things manually is because you get a really good feel for the market. So at the moment it's looking 16.22, but I'm going to leave it as it is at the moment as far as the settings are concerned. But here I can see graphically the best times to trade where there's the most volatility, and you can see it's between 8 and 9, 9 and 10. And it's not too bad between 10 and 11, but it's around an 80-point range, whereas in the 8 till 9 you can see that we're up in the 140. So again, that sort of power hour, and there's another visual of this as well. And in the afternoon you'll see that just drag this across, it's not too bad for the first there we go, for the first hour. And then it also peters off as well. But 40 points less generally in the afternoon. 15.32 has picked up as well. We call it the sort of 3 o'clock club. Come in and start to trade a bit more as well. So again, I like to do these things manually because you get a really good feel for it. It's how I started out in the early 90s with graph paper and just updating from the Financial Times. But it's a bit of a pain in the rear, of course, when you miss a trade like this. But even so, once you've got a close below the 200 bar moving average like this, all of the averages, and you've got the BRN there, and the bar obviously turns red. That's the first clue, and then prices moving lower. However, in the afternoon, a different story. We had a nice trade here, and again, let me just talk you through this. So here we've got the signal, and I'm just going to speed things up a bit. So the great thing about this signal, we went through the 200 bar moving average as well. We've got the weakness in the background from the morning session. I'm just going to fast forward, and you'll see prices are filled, and then they drive through. You can see they've driven through the scalp there, which is the first profit target. And what we're looking for is for the market to head down towards this BRN psychological level. And there you'll see prices moving down. And at this point, when you've got 28 points on the table, there's no problem in moving to break even. And again, let's just see how this unfolds. Because of the weakness in the background, prices then go through the BRN and then they continue lower. And what I'm looking for now is a close back above the 5 bar moving average as a short-term trade to say that prices are coming back, and there it happens. You can see prices there. It's just struggling with the BRN there as well, and 36 points on the table. You can see prices then coming back before returning back to the downside. It traded sideways for a bit and then moved back. You can see there it's just trading sideways. So a nice little trade for the afternoon to compensate for the missing one in the morning. I'd rather have good quality trades than have a lot of trades where I'm in and out all of the time. So that's the reason for restricting the settings in the software, just to make things stack the odds a bit more in our favour. And what else have we got? So let's just have a quick look. Implied volatility, obviously this kicked up yesterday. Option sellers a bit more concerned, 33.27. And when we look at the colour coded version, we're back to red in the implied volatility as well. So it is definitely starting to look shortish, but they're going to do whatever they can to bring this market back, of course. That's the goal at the moment, particularly as it's an election year. Okay, that will do it for this one. If there is anything else to report, I will let you know. There's no major news today, just the odd medium impact. So yeah, that's it. Okay, thanks for watching. See you in the next.